On today's episode of the Cryptoverse, I would like to share with you a methodology. The one question that I, and I'm sure most of you, want to answer right now is, when bottom? So I'm going to offer you a simple methodology that I'm using to come to those conclusions. So that way, if you want to find the likely bottom, and I say likely bottom, for any given coin, then you'll have the ability to apply this methodology yourself and determine for yourself where you think the bottom is, assuming that you think the methodology is sound. If you don't, then stop the video and just throw it in the bin and move on. So Bitcoin is the only crypto asset I'm going to look at, and I'm going to look at it against the dollar. And then everything else I look at in terms of Satoshi levels. That's how I teach it in my trading course, and that's what I think is the best way, given that I believe we're gradually going to move to a cryptocurrency economy. So let's begin with BTC USD Bitfinex. What I can do is I can hit the 1 year button here, and that then shows 1 full year's worth of data on the charts left to right. Now, if you're a loyal subscriber, you may remember a video I did a few months ago where I used my graphics tablet and I did a hand drawing of the concept of bubbles and how they represent a layer of speculative value on top of the fundamental, or what we might call the intrinsic value. So when looking for a likely bottom in prices, I'm going to go back to when the market was in consensus for some length of time about the price. And you could potentially draw this, I'm going to draw this as a green box to represent that fundamental value. And then I'm going to draw a red box to represent the speculative value, or the bubble portion on top. Now, I sometimes refer to that fundamental value or intrinsic value as fair value. So all those phrases mean the same thing: fundamental value, intrinsic value, fair value. Again, this is not an objective or a scientific measure. It's just where the market seems to be in consensus historically. And that's largely based on my judgment, which is the methodology I'm going to offer you. But you still need to use your own judgment to really make this work. So that's where I'm saying that in terms of fair value, it's where I see the market spoke and came to consensus and declared fair value. And that's the beauty of using the charts and technical analysis, is that it sums up the whole market sentiment into a single number at any given point in time. So that's why I like looking at this stuff. And you can derive so much from the psychology of the market from the charts. Now, the volatility in crypto markets, that makes it quite hard to find these points where the price came into consensus at any given moment, because the crypto markets just don't seem to stay in any given range for very long, or at least not long enough to give a high degree of confidence over what we can declare as fair value. Now, I would like to say, looking at this yearly chart we've got right in front of us right now, is that for Bitcoin, this fair value would be 5,800, and that's looking back to like October of 2017. But it only consolidated in that area for about 14 days. So this is what I'm talking about right here. If I get my box drawing tool here, no, not a box drawing tool, measuring tool, if I measure this length of time, it's like 15, 16 days before it starts going up again. And that's around that 5,800 level. That, to me, that's not really long enough. And again, I'm using my own judgment here, and I just don't think that's long enough for it to be determined fair value. It's not enough time for me to be confident that the market was, in consensus. I would much prefer the $4,000 level, and that's based on price action slightly further back. So if I just do one zoom out, back here in August to October, that's where I'm seeing more of it's like a 60-day period where the price range bound between sort of 3,000 and 5,000. So I can draw this here. So it's this sort of area like that. So I said I would draw that as the green box, right? So if we use the measuring tool on this little green box that I've just drawn, that's more like a 53-day period, and give or take a few candles, a couple of months, isn't it? So that range was sustained for more like a couple of months versus a couple of weeks
at the 5,800 level. And actually the middle of that range between 3 and 5K is 4K. So the reason I picked the middle is because it hit a high of 5K and a bottom of 3K. So it's anchored. It's almost reverting to the mean of 4K in that 60-day period. So that's quite a long time for crypto to stay in a particular range. So I'm drawing that green box to say, okay, based on that analysis, in this thought experiment at least, I'm going to declare that fair value, right? And you can redo this experiment as many times as you like and keep going back further than a year if you want to. So that's why I've drawn that green box there to represent the price as fair value or fundamental value. And then I can extend that all the way to the right, and then we can assume that's Bitcoin's fundamental value just for the sake of this thought experiment. So if I extend this all the way to the right here to the current day, that gives us a visual representation of Bitcoin's fundamental value according to my judgment call here. Now, if we accept for the sake of this thought experiment that this is Bitcoin's fundamental value, we can now draw the red box on top of that, which represents the bubble portion of the price, which is that speculative value on top of the fundamental value. So we just go to the box tool again and we draw, and again, this is on top, right? We draw another box and I'm going to stick this in red with a red border. And so that represents the total speculative value on top of the fundamental value, which is what we're after. Now, based on when you want to see the split or the proportion of the price that is the fundamental value versus the speculative value, we just adjust the height of that red box. So the fundamental value of Bitcoin shouldn't change much. It's pretty solid. In fact, it should actually go up. It's actually gone up gradually over the last year. The fundamental value of Bitcoin has increased without a doubt, but I'm excluding that from my analysis because it would be very gentle, right? So I'm just excluding that for the sake of simplicity. The volatility is just way higher than the increase in fundamental value. So like here, if we take the $20,000 high, well, it gives some perspective on how big the bubble was versus the fundamental value. And again, bear in mind, I'm building this analysis based on certain conclusions that I'm coming to. So if you don't buy into the first conclusions, then everything comes after that will be invalid. But I'm happy with my initial conclusions and I'm building the case on top of that. So while you look at this and you see, wow, my goodness, the proportion of the bubble value versus the fundamental value is so huge, that looks pretty bad, doesn't it? However, on the bright side, if we reduce the height of the red box and look at it in terms of today's price, because the price has changed, if we then pull it down all the way to the current price line down here, if you do it like that, and then you pay attention to the right-hand side of the chart, let's go in further. Right now, if you look at the proportion or the size of the green box versus the red box, well, we see that the amount of speculative value now is comparably less, right, than the fundamental value. The red box is smaller than the green value, which means that, that would be, you would assume that the price would stop when it reaches its fundamental value, right? Because people using it for its actual fundamental value will be propping up the price at that level, which I've declared at around, anywhere between 3 to 5K, call it 4K. So you could guess how much further Bitcoin could fall based on those conclusions. So that's one of the methodologies that I'm using to determine likely bottoms. And you can apply this same methodology to pretty much any crypto that you care to analyze. And I've given you my logic on how to select what you believe to be the fair value, but not everyone reading the same chart will come to the same conclusion about what that fair value is. That's why I'm giving you the methodology rather than spoon feeding you specific prices based on my conclusions. I'd much rather empower you with the methodology so you can adjust it based on your thoughts, your perspective, and your judgment, because then you can take ownership of those conclusions and have more confidence in them than you would just taking my conclusions and then hoping for the best, right? So that's all I've got for you today. So if you thought this episode was absolutely terrible, you can hit that button if you want to. But if you liked it, hit the like button, get subscribed, and maybe grab yourself a discount coupon down in the video description to any one of my online courses. You can also just go straight to cryptoversity.com and click on the courses section to take either the Secrets of the Bitcoin Triangle course or the Digital Money Revolution course. And if you click through from my website, that's got a discount link built right into the link itself, and you'll get it for just $19.99. Also, if you go to twitter.com/chrisjsconey, which stands for Chris Coney International, that's my Twitter profile, you should totally follow me on there. And if you go to cryptoversity.com/notifications, you'll be able to join my email list and get an email every time I release a new episode. Sometimes people complain that they don't get notifications from YouTube, even though they subscribe and click the bell. And if you've got a bit more time, why not check out yesterday's episode called Vitalik Takes an Algorithm from 1982 and Solves the 51% Attack Problem, which was a really interesting one. Other than that, I'll be back with the next episode of the Cryptoverse. So until then, it's me, Chris Coney, saying bye for now.